Good day, traders. Hope you guys are good and welcome to this week's segment of our weekly market breakdowns. So without wasting any more of your time, let's get straight into it. The first pair that I'm going to look at this week is NZDJPY. So, this is an update because we looked at it 2 weeks ago and we've already established that we're in an uptrend, right? We recently broke the structure over here and this is the low that broke that structure, right? We broke the structure from the U high. Now this is a weak high. Why is it a weak high? Because it didn't break this low over here, right? Now the market also created this low because when we broke the structure over here and we came back looking for an order block, we found an institutional zone right here. And this low also is a weak low, right? But when we compare this low with this high, this low is much more stronger because it's aligned with the main trend, right? So that's our structure. That's our structure, right? If we look at the zones, we had this daily supply, which is counter trend, right? And also we've already had 2 retests on it. Now you recall from our previous lessons that once you have more than 2 retests on a level, the probabilities of the market reversing from that level diminishes. So as a result, I'm not really expecting high probability sells when the market comes back to retest this level over here. All right. We also have this internal structure over here, right? And with this internal structure, we were able to get a high here and a low here. So the market is stuck in between this range, right? This low over here, let me use a different color, is also not confirmed because it hasn't broken any opposing structure. Also this high over here, right? But this low over here is a high probability zone or has a high chance of breaking opposing structure because it's aligned with the trend, right? Reason why I'm highlighting this is because it's a potential area of liquidity, right? So the first scenario that I'm identifying is that the market might drop, take out this liquidity, and then continue towards the upside. That's my first scenario on NZDJPY. The second scenario that I'm seeing, here we have to go to the lower time frame. Right. If you look right here, we got a breaker because there was liquidity below this low over here. The market swept it and then broke structure. Now the market came here to retest this level right here as a breaker block. And now it has broken internal structure, which you will see on the 1 hour. And it's also formed a flag. So I see a potential continuation towards the upside, right? With us having confluence on the weekly, the daily, and now on the 4 hour, right? So this is the second scenario that I see on NZDJPY. I see a potential buy setup. And then our first take profit being here, giving us a 1:2, 1:2.5, right? And for me to, so because it's a 1:2, I'm not really going to use heavy lot sizes. I'm only going to increase my lot sizes that we've identified on the daily. You get what I mean? So this is the second scenario on NZDJPY. And these are my sentiments on NZDJPY. But anyways, let's move on to another pair. Right, now we are on GJ. And also on GJ, you can see that we're in an uptrend with the market approaching the supply region over here. I think we've gone through it in other breakdowns, right? So as you can see, the market has been breaking structures towards the upside, with the most recent structure being the one over here. And then the market created a fair value gap. We got a retest the previous month. And now we got a bullish sentiment overall because I'm recording this on the 26th of June. And it looks like the overall sentiment for the month of June was positive because we were also able to break through the previous monthly high. I said a mouthful there, but yeah, If we go to the weekly, here's where you can see the fair value gap. We had a fair value gap over here, right? The market tapped into it with this wick over here, and then it went to the upside, right? Now, this is a low, and similar to what we saw on NZDJPY, this low is confirmed. Why? Because it broke through previous structure. The market created a high over here, which I think the market took liquidity, right? And then created this higher low over here. But this low is not confirmed because it still has to break above this high. So if we were being conservative, I would have said, or I would have liked to wait for a breakout and then a pullback and then buy from the pullback, right? That's a more conservative approach if we're waiting for confirmation. But like now we're taking the more riskier approach because I do see an opportunity for us to enter. I still believe that the market has potential to go towards the upside. So what is it that I want to see on the daily specifically? So on the daily, we have that high. You can see that we had this sort of, what can I call this? An induction going towards an institutional level, right? And this is the zone. Perfect. From this induction, we got a change of character. So one of the reasons why I always look for a change of character, because it's a sign, or yeah, it's a sign of a change of sentiment. Once you see a change of character, it doesn't necessarily mean that a trend has changed, but it's the first signal of a change in sentiment, right? Then we went into this zone over here. So actually, let me do this. And now this daily demand is in control, right? We have the supply over here, but it's not in control. Why? Because it hasn't broken any opposing level, right? Let's go to the 4 hour. If we go to the 4 hour, same thing that we saw on NZDJPY, right? But here there's a little twist over here. There's equal lows over here, meaning there's liquidity, right? Now, the market has incentive to take out this area of liquidity, go into a discounted level like this one, and then go towards the upside. You get what I mean? Because even if we look at the fibs, the market hasn't gone below the 50% region. So we want to get a discount on this pair. So that's why I said the market has incentive to, first of all, take out this liquidity. After taking out this liquidity, go a little bit beneath or below the 50% region, tap into this order block over here, and then go towards the upside. If we look right here, you can see we have a young trend line. I think it was the third retest. Might react positively from it, right? Because we had a break of structure. This zone is actually confirmed, right? But it's not a high probability zone. So we're not going to be selling. We're not going to be selling. But we might see a reaction from this zone over here. As you can see, there's a young induction going into this level. It's ideal, right? So, like I said, the market has incentive because remember what we said about the weekly cycle. You have an open, right? You have an induction going into an institutional level. You have a stop hunt reversal, then you have a strong push, and then the market ends in a consolidation. And what you see is a candlestick. So usually when you're expecting an impulsive candlestick to break to break structures, this is the type of model that you would like to see, right? So this does not happen every week, but most of the time when we're expecting large impulsive movements to break structures, that's what we will expect. And the conservative approach is to wait for the market to break above this high and then trade the pullback. If you can get confirmation on the structure over here, and then you get a continuation towards the upside. But yeah, this is a hot mess, but this is what I see on GBPJPY. Let me know what you guys think. And let's move on to another pair. All right, second last pair, we have CAD JPY. There's an update. As you can see, I didn't remove anything from the last time we looked at it. So this is the first scenario that we were expecting. Obviously, it failed. Why? One of the things that made this setup fail was the fact that we had congested price action on the zone, right? So the orders that were resting here ended up getting absorbed. That's why you got a breakout from that zone. The market ended up going into our discounted level and now going towards the upside, right? Still, this high hasn't been taken out, right? And the market, sorry, the market is showing signs of a reversal, actually, right? Now, there's liquidity here, and you'll see it when we go to the lower time frames. But there are fair value gaps. The first fair value gap is here. And the second fair value gap is here. Third fair value gap is here. Now, this means that we have two zones. The first one being here, second one being here. Right. Let me remove this, and then replace it with this, right? Now, this means that the first scenario for me would be for me to I expect the market to take out this liquidity because it has incentive to take it out. And then if we can get a change of structure or a change of character on the lower time frames, we can buy using this as our first take profit. Or we could wait for the market to go a bit lower, take our trade from here, wait for a similar thing, a change of sentiment, go towards the upside, or in the most unlikely event, the market goes all the way to the downside, filling out this gap over here, and then we get an opportunity to buy. Remember, if we go to the weekly, our take profit is far, far, far. Our take profit is actually here. You get what I mean? So on the weekly, it's tricky because I see a zone here, right? I see a zone here, but this zone hasn't broken any opposing structure, right? That's tricky for me because that's one of the conditions that I look out for when I'm trying to trade from a level, right? But if, say, for example, we get other conditions satisfied, meaning we have a strong departure, we have the market consolidating away, now we retest. If we were to go to the lower time frame, the nested zone would be this one over here. So it means that the higher probability levels will be the first one being this one, right? I don't know if I should use a different color. First one being this one, and then the second one being this one. So definitely the first one over here is not a high probability level. The second one is a high probability level because it's nested, and this one is our discounted level. So yeah, that's what I see. But in the longer term or in the long run, I see a buy opportunity on USDCAD. Right, let's move on to our final pair for the week. Right. I actually want to close this week's market breakdown by looking at the dollar index. So The dollar index, as you can see, this zone over here that we were expecting to see hasn't been taken out yet. The market, as you can see, is generating liquidity on this area over here and also here. So there's compression, right? With a compression, you can expect a huge movement out of it, right? When you see a compression or consolidation, just know that eventually you'll get a strong movement. Now, I'm leaning more towards the downside because the market has incentive to go to a 50% zone, either to take out the zone and go towards the upside, or go to this discounted demand zone, which is fresh, confirmed, and nested within the 50% region, and then go towards the upside. So this is the first scenario that I'm seeing on the dollar index. Also taking into consideration that the weekly or that the daily closed with a bearish sentiment, right? Another thing that we could look out for is obviously a breakout. If the market breaks towards the upside, I'm only going to take this if we break through this high. You get what I mean? Let's go to the weekly. If we go to the weekly, we have the same thing that I saw on NZDCAD, on USDCAD, but the only difference here is that this weekly zone is confirmed. Why? Because it has broken through a previous structure. So it's confirmed it has broken through a previous structure. We had a candlestick consolidating away, and we could expect a bearish week week to retest this level, and then movement towards the upside, right? If we go back to the daily, where we're most likely going to see that reversal. On this nested weekly, on this nested daily demand zone, right? So yeah, this is what I expect to see on the dollar index. And this is where I have to end it for this week. Remember, we have a series that's ongoing, the Market Inception series, where I'm teaching you guys how to look at the market from a different angle, right? Currently, the recent video that I dropped was on the COD report. And like I said, in the Telegram channel, we are halfway through with the series. So if you have time and if you'd like to learn other ways of looking at the market, make sure that you check that series out and hope to get feedback, right? But yeah, this is where I have to end it. Thank you if you watched till this point. And see you guys in the next video. Peace.